it is largely because narratives are self-perpetuating. If enough people believe the narrative, then that will be the case until we eat through all of the free float supply. And one of those very strong narratives is, of course, the 4-year cycle. You've got a lot of people out there that believe it, including OG whales, who've gone through it 4 times. And they're now like, this isn't rocket science, guys. Like, this is what happens. What's going to be interesting is when we get round to October, and I think by that stage, we'll be looking at new all-time highs. They will have sold quite a portion of their stack because that's what Saylor's eating through at the moment. And then you're going to get a shock, like a real shock in the market.
You have that 5 to 10 companies in the world that are literally laser-eye focused on digital credit. And those companies are completely misunderstood. Strategy, Metaplanet, Strive, Capital B are all beating Bitcoin from all of their respective startup strategies by orders of magnitude. And that was without the STRC, SATA, and the equivalents at those companies.
Hello, everybody. Welcome to the Bitcoin Treasuries.net roundtable. I've got Alexandre Laizet with me, as always, my trusty sidekick who keeps us uber bullish. We've got Richard Byworth joining the show today. Richard, how are you doing?
Very good, Tyler. Good to be here, and always good to see Alex. So yeah, happy to be here.
Yeah. Great to have you guys. So, Richard, you've been busy. I think every time, last time we talked at length was last fall. You know, the kind of start of the bear market. What have you been up to in the meantime?
Yeah, a lot. Well, look, maybe I'll start backwards because today we launched our new firm, myself and Mark Sees. So we left Sees Capital about the time that you and I spoke. I think we spoke in October, so we were in the process of leaving the firm. And then we left in November, and we started our new firm, Bees Partners, which sounds a lot like the old firm, but that's simply because Mark's surname is obviously the name. So Sees, so it's Byworth and Sees. It's come together as Bees Partners. And really there we wanted to do everything that we'd been really focused on within the previous firm, but was sort of having our limitations put on us by the board and the fact that we were integrated with a banking group. And so for us, it was becoming more and more obvious that the product we'd created, the Bitcoin fund, that is a very low volatility approach to creating a return in Bitcoin, was actually a really powerful tool for Bitcoin treasury companies. So, you know, with my work in the Bitcoin treasury space, it allowed me to obviously speak to the key people that are trying to generate as much yield as possible on the Bitcoin that they have on the balance sheet, or Bitcoin yield in terms of the growth of Bitcoin per share. A product like ours that had been designed by traditional finance people like ourselves was actually very powerful in the Bitcoin space. And, you know, we ended up being the largest fund globally doing something like this by a factor of, 10 times. So it really create very, very low volatility returns to provide essentially a return that is around the 3 to 8% level in Bitcoin. And we do that through a number of different strategies: arbitrage of basis, statistical arbitrage, bit of Bitcoin lending, and volatility arbitrage. So we put all those strategies together. I mean, some of them can be quite high vol. So if you look at volatility arbitrage on its own, it's a 15 vol strategy, right? Which is way too volatile for you to allocate to. But when you put it in a portfolio of different strategies, it brings the volatility down. So you end up with a portfolio of about 1 to 3 volatility. With that return profile, it gives you a super high Sharpe. So, you know, Saylor started talking about Sharpe ratio and understanding the difference with volatility and return, which is critical for risk reward payoffs. And, you know, one of the problems we had with our board was just them not understanding that Bitcoiners are actually really conservative people. Like, they do not want volatility in their Bitcoin return or Bitcoin amount. So it's really hard for a fiat brain to understand that Bitcoiners are risk averse and don't want volatility. So I remember the very first conversation we had with the board is like, why wouldn't you push this volatility to like 25? Because Bitcoiners are used to volatility. It's like, no, there's zero volatility in Bitcoin. Like one Bitcoin is one Bitcoin. So you can sort of understand the level of conversations we were having at the board level. And it just got to a point in October where we said, look, this just really isn't working. So we ended up leaving the firm, and today we announced the launch of the new firm. So the first product that we will launch is the relaunch of that fund, that will probably be in October of this year. And we already have demand of about 4,000 Bitcoin, but obviously working with some of the Bitcoin treasuries, this is a tool for them to extract yield in a very low risk fashion. I've always been a big fan of what Simon at Metaplanet has been doing with the put underwriting. And so to sort of have another tool for the Bitcoin treasuries to use to be able to generate yield, I think is very powerful and something that the industry as a whole really needs. Happy to help plug that gap, so to speak.
Really cool stuff. Yeah. How do you, Alex? I'll come to you on this. That is something for traditional allocators that could be really difficult for them to wrap their mind around when you've got Bitcoin treasury companies, Bitcoiners who are denominating in Bitcoin. So, like Richard said, there is no volatility on Bitcoin when it's your so-called unit of account. What's challenging in conversations you're having with capital allocators? Obviously you deal with some who understand Bitcoin natively, of course, but then of course you're trying to attract capital from different pools around the world. What are those conversations like? And is the bear market the time when you can really kind of make the case for Bitcoin?
I think I would separate capital allocators into two categories. One category is Bitcoin maximalist investors. And the most challenging part is that typically Bitcoin maximalists are all in. And so you can imagine that when there is a drawdown in the fiat price of Bitcoin, those investors are already fully allocated in Bitcoin. And there you get into the discussion around how to generate Bitcoin denominated yield without touching the Bitcoin, because it's not because there is less fiat liquidity that investors cannot generate additional upside. And for those types of situations, typically that's where the type of fund that Richard is launching gets some interest, because investors want to keep their Bitcoin, but at the same time want to get some type of income on top of it. And at the same time, at Capital B, what we aim to is also to provide some options in terms of possibility to generate upside on top of Bitcoin without having to sell Bitcoin. And of course, that's the whole discussion around the convertible notes and so on. And of course, as Richard mentioned, the Bitcoin income generation strategy makes a lot of sense. Typically the one that has implemented Metaplanet, as Richard mentioned, with a lot of success. And on the other side, institutional traditional investor is more looking at momentum typically, and is looking at increasing convexity and optionality as he anticipates a movement in the market. And that's where we have most discussions around how you can add options and warrants and additional upside to a traditional capital raising operation. And that's more the type of operation like we did last week where there is a 15 million raise, and then you add to that 99 million additional in the future, and you have an acceleration exercise for the company to have as well accretive conditions as Bitcoin grows back, or the MNAV level that we already mentioned in past raises. And so I think that the industry is really maturing around those BTC yield generation options. And there comes the competition. And actually, I would be curious to hear from Richard. What is your view on the BTC market in general and going into the next months and year? And what do you think were the strategies that used to work a lot compared to the strategies that you think would be the most pertinent in terms of your fund? Because typically there are really 2-3 buckets in terms of yield generation: the options, the lending, and the basis trades. And of course, if you add to that all of the different Bitcoin treasury company products and securities that they can issue, I think there could be more opportunities that what's been explored in the past as well, in the coming months and years, and with digital credit, of course, and so on.
Yeah, I can jump in if you want, Tyler, to respond there. I mean, obviously, Alex, I spend a lot of my time, as much as I'm talking to Bitcoiners, I'm talking to fiat-minded allocators. And, right now with these valuations in Bitcoin treasury companies, I think this is one of the best ways for you to be able to achieve yield. Because, people like yourselves, Strategy, Strive, Metaplanet, they're all driving towards different ways of adding Bitcoin per share from an MNAV base of 1 or thereabouts, right? And I think this is where it's a really interesting time to be. If you think about your Bitcoin capital allocation, to be allocating a much larger portion of it to Bitcoin treasury companies, because as we run into more of a bullish environment, you are going to see an expansion of that MNAV. You just have to, because, Saylor's essentially running a leverage carry trade. As I said, Metaplanet hasn't quite got there yet, but they've got the put underwriting strategy. And one thing that I chatted to Strive about over the week in Madrid last week was,
if you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
and this is something that we haven't seen executed yet, and was something that we were thinking about doing in Switzerland when we were trying to launch Future in Switzerland, is if you've got a ATM running constantly, or you've got the ability to run an ATM constantly on your common, idea of selling your common at a 1 times MNAV, even as low as a 1 times MNAV, and at the beginning of the week selling puts at the money, right? You're essentially saying, I'm going to buy Bitcoin at that level where I'm, assuming Bitcoin, is choppy over the week. I'm going to be selling my stock at a 1 times MNAV, but I'm getting a premium uplift on that with the puts that I'm, getting paid for. 1 week put, depending on the week, it can be anything between 1 and 3% that you get paid additionally on the notional of the Bitcoin that you're buying. So, it's not something that Metaplanet have even done yet. They've been a bit more conservative in their approach. They've said, we're going to take cash, stick it on the side, and then use that to be the collateral for the puts. You don't actually need to do that because you've got Bitcoin as collateral. Most puts on Deribit certainly are denominated in Bitcoin. So you can just use that as your collateral base. You've got cash coming in through the ATM. So you can do a sort of a worst and best case scenario analysis to assess, if things go really wrong this week, what's the worst case that we're going to be able to get in through the ATM? And then you can just say, okay, that's the amount of puts that we're going to sell, and make sure that you've obviously got that cash coming in. So it's a bit more of a sort of higher risk strategy from the mindset of saying, I'm going to stick the cash to one side and have that as the collateral for the puts. But really, for a Bitcoin treasury company in the unique position that they're in with these ATMs, it's a very low risk. I'm not going to say it's zero risk, because there might be a situation where the stock liquidity dries up completely and suddenly you don't have that cash to be able to buy. And that's why you have to do a worst case scenario based on, previous weeks, what you think's coming, etc. But one thing I'll just say about the fiat-minded investors that I'm talking to about these Bitcoin treasuries, they're like, yeah, but it's underperformed Bitcoin so much. And you have to really go and say, look, they were trading on a 3 to 5 times MNAV. You've seen a deflation of that MNAV. We're now at the point where that MNAV is essentially flawed for companies with no indebtedness. So you should be able to be pretty comfortable with that as a floor. So you've got that asymmetric payoff profile as MNAV expands, or if we sit here or chop or go down, you're probably going to remain with that floor close to 1. So that's a messaging that we try and get across a lot, but it's something that's really, people get really stuck to price. They're like, why hasn't it correlated to Bitcoin? So you're really having to explain this trade from a very basic level to your average investor and average LinkedIn poster that seems to think that they know what's going on. In answer to your question, Alex, about where we're going directionally for Bitcoin, I mean, Peter Schiff said it best, I think, the other day. He said, this cannot go on for much longer. When he was talking about Saylor buying, I think it was about a month ago when Saylor bought 50,000 Bitcoin in a week. He said, this just can't go on for much longer. And he's absolutely right. It cannot. We are talking about a finite asset. Saylor's eating all the free float. Obviously, you're participating, Alex, as well. And other BTC-TCs are as well. Like, the other part of my work is with Jan 3 on the sovereign nation side. And I can tell you, the amount of conversations we're having today versus when I first joined the team 2 years ago, it's night and day. Like we have different conversations with countries popping up all the time. So there is a huge amount happening on the demand side, if you include the BTC-TCs, as well as the sovereign nations. And supply is just getting eaten through. I think that it's really only a matter of time. We all know that as Bitcoiners anyway. But I think it's getting very close. We're down to sort of all-time lows of free float that is out there, depending on which data point you look at. Glassnode, Chainalysis, all these guys, they have different numbers, but they're sort of all at the lows that they've ever been. I would say that we're not far away. I would say that we could have a really interesting summer with this, and especially with, Saturn now moving to daily dividends, and this just constant demand that's going to be coming in. The other aspect of demand that I look at is, of course, from individuals and retail, because I sit on the board of Relay, which is a dollar cost averaging app here in Europe, a bit like River in the US. And yeah, I mean, even in this bear market, volumes are very healthy. The OTC desk is growing and growing and growing. Corporates, like private corporations, are coming in to put Bitcoin on their balance sheet. There's something like 20,000 corporates, in Switzerland alone that could be doing this, and hundreds of thousands of them across Europe. So this is a market that is as yet untapped and is just going to keep growing. So I think the demand side is just looking as healthy as I've ever seen it, especially given the environment that we're sitting in.
Yeah, it's incredible. I've been meaning, I think you're one of the best guys to answer this in Bitcoin, is what is your, I guess, base case for why Bitcoin's price hasn't, catapulted from this bear market, given the persistent bid that strategy has had, on Bitcoin? Obviously there was a lot of distribution, I would say, over the past year as, we hit that 100K US dollar price on Bitcoin. So that was a big number for people. And I think some of the on-chain analysis bore out that long-term holders were selling. But why is the spring still coiling for you, Richard?
It is largely because narratives are self-perpetuating. If enough people believe the narrative, then that will be the case, because enough money gets put in that direction, that it will make it the case until we eat through all of the free float supply. And one of those very strong narratives is, of course, the 4-year cycle. You've got a lot of people out there that believe it, including OG whales, who've gone through it 4 times. And they're now like, this isn't rocket science, guys. Like, this is what happens. So they're not really looking so much at the demand side. For them, it's just a natural function of the 4-year cycle. So they dump, and then they look to buy back at the depth of the bear market. What's going to be interesting is when we get round to October, and I think by that stage we'll be looking at new all-time highs. The bears will have, the OGs would have been looking to reposition at that point. They will have sold quite a portion of their stack, because that's what Saylor's eating through at the moment. And then you're going to get a shock, like a real shock in the market. If they try and get it back, they might just give up and say, okay, we lost that Bitcoin. But yeah, there's also the likelihood that they're going to want to try and get it back.
Yeah, makes a lot of sense. I do want to talk about, you touched on this, Strive's move to daily dividends. Alex, I'd like your take. Things move so fast here. It seems like forever since we've talked, but I don't think we've chatted on the roundtable about Strive's move. Matt Cole, their CEO, rang the bell at NASDAQ last Friday, I believe, and they've kind of positioned themselves as the daily dividend company. So they're going to be paying out dividends 250 days out of the year when the markets are open. If markets are open 24/7 like they are in Bitcoin, I'm sure they'd be paying every single day. What's your take on the importance of that, the importance of having a company doing something so groundbreaking that is a Bitcoin company? Like that's just going to bring a lot more eyeballs onto what's happening in Bitcoin and Bitcoin treasuries.
Yeah, well, I think it's the level of asymmetric information has never been so big. And if you look at the grand scheme of things, Bitcoin is still like a very small asset compared with the overall asset size in the world. If you take $1-2 trillion, 2-3 even, and you compare that with about the 1 quadrillion of assets in the world, you realize that what's happening is the wealthiest people in the world still don't take Bitcoin seriously, or they don't understand the significance of it, or they look at it as a trade, as a momentum. They look at it at best through a 2 to 7% allocation to improve portfolio, or they have at least a USD benchmark to compare the performance. And at the same time, you can just see how the space is moving so fast in the depth of the bear market, consolidation market that we are into right now. And when you see all of the different banks, the Charles Schwab, the Morgan Stanley, of course, the BlackRock doubling down, like digital credit is already like 300 million included into the BlackRock funds and so on. And that's just one example. And then when you see the level of accretion of the Bitcoin treasury companies that are focused on digital credit in a time that's like completely irrespective of what Bitcoin is doing, frankly, at that point. Of course, not going minus 80 or 90%, but like in the sideways market, typically in the last bear markets, Bitcoin treasury companies would not raise substantial amounts of capital. And now you see that not only those companies are raising additional capital and buying Bitcoin, but they are doing so in a level of accretion that more and more depends on execution and less on the Bitcoin price appreciation. And on top of that, you have that overall context that people miss between the sentiment in the short term that's caused by the shockwaves of AI, the shockwaves of the geopolitical tensions, and all of that affects short-term liquidity. And as well, in the traditional investor mind, they see that the volatility that we used to see only in Bitcoin is now you can see it in AI stocks, and and so you've had that again that narrative of like typically like the traditional investor would say Bitcoin is too volatile. And now even the stocks that are like traditional in the AI sector are more volatile than Bitcoin right now. And so in some way, Bitcoin has become that less volatile asset compared with other traditional asset classes impacted positively or negatively by AI. And all of those things, I think you have to separate between the sentiment and the short-term impacts of those things compared with what will be the state of the world in 1 year, in 2 years, in 3 years. And all of those things, you can already see that the interest rates and the government debts are going through the roof, like 5% in the US, 4% in Japan. The carry trade with the yen is having issues, and then you have all of those impacts that draw liquidity from the excess liquidity that would be allocated to Bitcoin is going down. And at the same time, you can see that all of those things piling up are the exact ingredients that would lead to more money printing. And so, you can wait for $100 trillion to be printed, to be bullish. But when I see 6 trillion or 10 trillion being printed, you just know the direction that this is taking. And so that's why all Bitcoin investors that I know I've spoken to in that year, 2026, right now and throughout the end of the year, are repositioning, taking up additional convexity, optionality, taking advantage of what is the state of the market. And if you add to that the level of innovation and execution that is strategy with STRC, Strive with SATA, and I'm sure Metaplanet will find a way to roll out, of course, their preferred as well. And of course, that's also our focus at Capital B and many other companies. And you have that 5 to 10 companies in the world that are literally laser-eye focused on digital credit. And those companies are completely misunderstood right now by the world. And so the investors that can benefit from both the misunderstanding of Bitcoin and the misunderstanding of the value accretion that Bitcoin treasury companies that are focused on digital credit can provide in the next year, 2 years, 3 years, are going to completely amplify their performance, even without the potential of digital credit for those companies. If you look back at the start of each of their respective strategies, Strategy, Metaplanet, Strive, Capital B, are all beating Bitcoin from all of their respective start of strategies by orders of magnitude. It's like You can take 20% for Bitcoin, 300% for capital B. And that goes on and on for each of those companies. And that was without the STRC, SATA, and the equivalents at those companies. And so, as always, Tyler, I think the main problem is people are not bullish enough right now. And they will have to buy back higher. And that's life. It's okay.
Yeah.
Totally.
I'll just add a comment before I go because I have to jump. But on the Strive thing, I had this weird thought last night. I was doing some posting on LinkedIn and the guys on Strive had talked about their daily dividend. And so I just posted on it that this could potentially be a way, because if you think about the fact that if I go and buy $20 of SATA right now, like they're going to have to pay me a daily dividend and it's going to be cents, right? Like, so it's not efficient in the current system. So there's going to have to be some sort of fix for this. And it just made me think of the way that Strike delivers US dollars on the Lightning Network. And the fact that actually this could be the trigger to get the financial system to start to look at potentially using Lightning. I mean, it's a big sort of left field idea, but the fact that you could actually, by virtue of the fact that a Bitcoin treasury company is creating this multitude of admin, right, with daily dividends and the cost for that, and then the drag that you're going to have on that dividend as a result because you've not got a big enough position, is going to end up saying, okay, we need to make this system more efficient. And actually, if they look at the way that Strike delivers dollars, that could actually end up being the right way to do it via the Bitcoin Lightning Network. So leave you that very left field thought. I'll catch up with you offline, Alex, about what you think about that. But I'm sorry, I have to jump right now.
Yeah, thanks for joining us today. Make sure you follow Richard at Richard Byworth on X. Take care, Richard.
Thanks, guys. Bye.
Yes.
You got it. Yeah, just absolutely kind of wild, a wild week in Bitcoin treasuries, a wild week in digital credit. If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Of course, we had Strive. We didn't even talk about Stretch, and Michael Saylor bought another 25,000 Bitcoin. You know, at this point, you have to laugh. And you know, I think Richard's right. We're kind of gearing up for a big bounce in Bitcoin. We can't say when it's going to happen. You know, a lot of times these things, the summer can be kind of the doldrums, and when Wall Street hops back in the saddle, when people are back from vacation, the fall is when we might see some liftoff in price, and that's kind of my base case, is when we'll start testing 100K again. But don't look at my track record on the predictions, but it's going to be really it's going to be really interesting to watch Bitcoin treasuries like Capital B, and see what the investor sentiment is like. I'm curious what you think about. Obviously, MNAV is something that is out of your control. Running a company, you can tell the story of your company. You can be in the lab and find out creative ways like you have to acquire more Bitcoin. Do you think we see an explosion in MNAV, like Richard said again? I can't imagine we're going to see 10x MNAVs again or something like that with some Bitcoin treasury companies. But I wonder if this is something that, we can see rapid expansion, see it decrease when Bitcoin's price falls. What's your base case for that, Alex? And, are rising MNAVs, like, to me, that's a bullish sign, right? Is because people expect a company to acquire more Bitcoin per share over the long term, and I think the market's still going to digest. When is the proper time to buy these Bitcoin treasury companies?
Yeah. Well, so first of all, I would like to say that I would like to applaud the success of Strive and the efficiency and the speed of the launch of their strategy and the release of their digital credit product and the innovation that they are putting in with the daily dividends and the level of communication as well on this. That's, I think, a great example. 1 year ago we were speaking always about strategy and Metaplanet, and now you see Strive. And so you see that, yes, it's a few players in the industry that are focused on digital credit, but I think we are very lucky to have very serious people in the industry that are focused on doing the right thing and structuring the right balance sheet and the right capitalization table and having the right conversations with institutional investors. And a lot of this happens behind the scenes, but it happens and it makes a big difference. So I think that digital credit is really transformative, and that this is not really appreciated by the market right now. So that, and I forgot your initial question.
Yeah, I was thinking about like sentiment and MNAV, in a bull market.
So on the MNAV level, I think you have seen as well the reaction of the success of the launch of the products of Strive with SATA. You have seen the reaction on the accretion and the speed at which STRC is being adopted. And you can definitely see that there is a massive opportunity for another company in another region that would have the capacity to deliver such a product in a way that would maximize value for shareholders, and that would deliver the best product market fit for the region that this issuer is in. And so that is, of course, the focus of Capital B, and you could see the initial impacts already in the MNAVs of Strategy and Strive. And if you look at, I think you have to look at the numbers and form your own opinion. But if you look at the 1 year average of the MNAV of Capital B, it's been at 2.97x. And if you look at the median, it's been at 1.5x. So a typical traditional investor would say, oh, during a 1 year period, you've had valuations between 1.5x and 3x. And the company has been between literally 1.1x and 12x, and right now is sitting at 1.3x. And so 1.3x is lower both than the median and the average during a period that's mainly composed, in fact, during 1 year of now a consolidation bear market. So I think that providing some indication into what could be seen in the sector overall, you could do that exercise with other companies and do your own analysis. But in traditional markets, when you look at valuating the cash flows of a company, you typically hear those valuation multiples of 5x or 7x. Those ones typically come back a lot. And when the company, there is some uncertainty, some investors would say 3 to 5x. And when the company is growing at a steady pace, investors would say 5 to 7. And when the company is exploding, they would say why not 10 or 20 and so on. And so that's exactly what we've seen in Bitcoin treasury companies. We've seen 10 to 20, we've seen 5 to 7, we've seen 3 to 5, and now we are literally at the lowest levels. At the time where the market is focused on AI, is focused, and it's more than, we think. You were asking what is the number one challenge with traditional investors. The number one challenge is that traditional investors have mandates to generate returns, and when they see that momentum is in AI, they go into AI. And when they see that momentum is into gold, they go into gold. And when they see that momentum is into Bitcoin and Bitcoin treasury companies, they go into Bitcoin and Bitcoin treasury companies. And so you have investors that are already positioning because they believe that the purest form of the AI trade is actually Bitcoin, and that it is inevitable that the AI trade is going to rotate into Bitcoin. And you have other investors that say, look, if the AI trade is in fact going into Bitcoin, well, it's going into Bitcoin treasury companies. And what are the Bitcoin treasury companies that have the best product to accrue Bitcoin per share in the most efficient way? Well, those are the digital credit issuers. And what are the companies that can be the best Bitcoin digital credit issuers, or have the path to be those, or have the path to maintain and structure a dominance into their respective market or domain, the daily dividends, the region-specific advantages, and so on. And so that's why, in my view, I already saw Bitcoin maximalist investors reposition. I already saw firsthand traditional financial institutions of significant size reposition, and that's been also the raise that we did last week. And I think the next phase is that momentum investors will come back in short order whenever you have a structural macro change, whether it be the geopolitical elements, whether it be some kind of announcement on the strategic reserve, or some kind of lowering of interest rates, or some combination of the three. I think we will see a combination of the three in the next 2 to 3 years, and it might happen before. But that's the biggest opportunity right now for investors. And at the same time, we are feeling really grateful that we have the time to build right now. And at the same time, we always feel that the time, is running out. So we always operate as if Bitcoin would skyrocket the day after, because you never know. And you have to be prepared, and you want to go as fast as possible. And we are just so lucky to be able to see that and to share that information. And that's why I think that what we are doing now is also important.
Yeah. Yeah, it's really good. I think there is incredible opportunity still right now. Yves Shafati was on and said, this is a generational opportunity in Bitcoin treasury, certainly. And he's put his money where his mouth is, certainly. I had someone text me the other day asking about it was a specific Bitcoin treasury company that I don't know a lot about, a much smaller company, and he was still asking a lot of he's directionally long Bitcoin, not a Bitcoin maximalist or anything, but really still kind of focused. This is a retail investor, but on kind of more traditional narratives. But when you strip down, if you've got a directionally long take on Bitcoin, or at least a position that is not going to zero, right? Just looking at the way Bitcoin treasury companies are trading now, there's still so much opportunity, because it's plainly obvious when capital markets are open, even more in a bull market, that the increase in Bitcoin per share is just a phenomenal opportunity. I'm curious about Michael Saylor's kind of strategic pivot, talking about how they're more open to selling Bitcoin as a defense against shorts. What do you think about that decision by the company? Michael's always been nimble when thinking about when listening to the market, listening to investors, and there was a point, I would say probably about a year ago, when I think it would have been a great time to make that kind of announcement. And I thought it was interesting that he made the announcement kind of when his stock was trading close to the net asset value of the Bitcoin. What's your read on that, Alexandre? Do you think it's more of a narrative, a narrative pivot for strategy that will, kind of just as a warning to shorts, or do you think there's something more there?
I think Michael Saylor, Fongli, and the team at Strategy are establishing a master plan to have Strategy buy up the maximum number of Bitcoin. And that includes a plan with 5 steps of advance compared with the bears. And those 5 steps in advance are one, that saying that you can, in fact, sell the Bitcoin, and it is an obvious thing to say, because that is exactly in all of the financial statements of Bitcoin Treasury Company. Bitcoin Treasury Company has the full discretion of its treasury, because it is its treasury, and it chooses to have Bitcoin as a long-term store of value, and intends to not sell it, because it considers that this is the best store of value humanity has seen. And at the same time, it is of course as well the capacity of the company to use those assets that also attributes a value to those assets. And so the first step in advance is that this will accelerate Strategy's capacity to be included in major indices, S&P 500 and so on. And the second major step is that this will also accelerate the discussions with credit agencies, because you are talking about a $60 billion plus balance sheet, and that should be valued. And whether that should be valued with a buffer, or a bigger buffer, or a smaller buffer, that's a discussion, but zero is definitely not serious for a credit agency. And then the third master plan is that when you are into discussions with major institutional investors, the best way to explain digital credit and its strength is to explain it purely as asset-backed lending. And so if you can have an asset that you can use to pay the interest, the dividends, that means that is a purely asset-based financing that is based on the long-term outperformance of Bitcoin compared to the level of dividend coverage obligations of the company. And in that respect, Strategy has shown, and you can see that as well in our presentations at Capital B, we show visually that Strategy, for every dollar of annual dividend, has about $1.5 to $2 of cash in the reserve, and has about $60+ of Bitcoin reserve. And so that's decades and decades and decades of capacity. But saying publicly, not only in financial statements, but making that clear in the public also allows for institutions to say, okay, so even if strategy said it publicly, it doesn't affect at all the market, and we could see it. In fact, it was quite a positive effect. And so that means that really this is not posing any structural issue for the company. The company is built for this. And so that's the third element, that it reassures institutional investors. And so that's where you come into the fourth effect. The fourth step of advance is that then institutions will allocate more capital to that digital credit. And they will allocate more capital to the digital equity. And that will accelerate further the Bitcoin accumulation strategy. And the fifth effect is that not only retail investors will also see much bigger returns from the equity and much more liquidity for the digital credit, but as well that possibility of additional size and confidence of the institutional market in general also helps further out all of the other Bitcoin treasury companies that are focused on digital credit and that are going into the meetings with the institutions in their respective regions. And I can tell you that firsthand. The fact of saying, look, strategy is the first and largest digital credit issuer in the world, and the product is the most important success in finance in the last year, and you cannot ignore it. And by the way, Strive is a second company that has issued that listed digital credit, and it's gone to par after like 4 months or less. Matter of 2 months, or so it's very short time, and it shows that the progress is really exponential at this point in digital credit, and that on top of that, on the equity side, those companies are performing quite well. And so you have all of those factors that enable more companies to issue more digital credit at a faster pace, at a more efficient pace, and that in turn creates a sector, create a benchmark, and you have funds, ETP providers, and major financial institutions that launch ETP, of course, funds with tranches like UTXO, and you have senior tranches and junior tranches, and you have the tokenization players like Apex that go out and have $200 million plus of digital credit in digital finance. And you can just see that this sector is taking a shape that will completely transform all over asset classes, because it is much better than the S&P, because it's lower volatility right now and about the same performance. And it is much better than traditional credit, because it is about the same volatility, and it's much more liquid, and it's like 2x to 3x the performance. And so all of this to say that the announcement and the clarity of strategy in the latest earnings call has been a massive win for strategy and for the industry. And it shows how the sector is maturing, evolving, structuring, institutionalizing, and scaling. And I would like also to salute the level of analysis and understanding and engagement of all the individual investors on X. And I'm really grateful to be together with you and all on this journey. I think it's really passionate, and the level of asymmetric information we have, again, it's really crazy.
It is.
It's completely crazy, and you have to understand that today, like Bitcoin is like 0.1 or 2% of global assets, and digital credit is a fraction of that, and that the opportunity that we are in front of is just completely massive over the next 10 years. And this will be billions and billions and trillions. of dollars in the coming years.
It will. Before we leave, I'd love to, like, obviously Capital B, you said is working towards, becoming a digital credit company, because we've seen the success and the success of Capital B in another capital market, like, just being able to tap that. The sky is certainly the limit there, because I think Saylor has designed such a great product that can be used in different capital markets, and I'm really bullish on Capital B and other companies in different markets on their ability to execute, because the playbook's right there, right? You've got that asymmetric information, so use it. What lessons have you learned as you're building towards this? Where both Strive and Strategy have gotten their product to trade, like you said, at par. SATA in just 4 months is trading at par, like 10 days before their record date. And obviously the success of SDRC is well documented. Our viewers know it well. What lessons have you learned with how they've been so successful and able to get to par so quickly? And how can a company duplicate that?
Well, I think it's the same approach as the one that we took from the very start. From the very start, we said that the way to differentiate is to not differentiate from the model that works. And the model that works is the model of strategy. And that's been our positioning since the very beginning, when we launched back in November 5, 2024. And you have 99% of market participants that want to be smarter and want to do the new thing and want to experiment things that, would be better than strategy, while it is the obvious thing that strategy is the most efficient accumulator in the market in the last 6 years. And so the biggest advantage that Capital B has is the ability to be the early stage strategy for Europe. And that's been our focus from the very beginning, with equity, with convertible notes, and now, obviously, with the focus on digital credit. And of course, you adapt it to the local market and to your size and to where you are, to maximize the possibility to reach the critical size of where our Strive and Strategy today. And that's been the example last year of our Bitcoin convertible notes. This year, the challenge was, well, we are at 2,900 BTC. How to go towards that 4,000, 5,000, 7,000, 15,000, our objectives by the end of 2027? Well, you raise additional equity and you structure your way towards more issuance of digital equity as BTC is in strength, as the share is in strength. And you do that to issue digital credit in order to maximize the BTC yield of the company and to increase the amplification and to increase the pace of the growth of the company. So that's exactly the operation that we structured of the 15 million raise that enabled us to already acquire, together with the operations ongoing, 192 BTC. That's put us already at the 3,135 BTC. And we have that capacity to raise with that equity towards, $100 plus million additional. So you can take your type of BTC cost basis that you can imagine, but the company, that's the most important point, can accelerate the exercise so that we can accumulate Bitcoin when the conditions are close to those accretion levels. And on top of that, you focus on the digital credit, and that raise is to maximize the digital credit issuance capacity. And you structure a product that can have the best product market fit for your region, your continent, and the benchmark, the best market practices are STRC, and SATA. So you will not reinvent the wheel. You will distribute the wheel in your region with your competitive advantage of having a sustained market with hundreds of millions of people that use a specific currency, that institutions have specific mandates in that region. There is specific tax advantage wrappers in that region for EU-based issuers, and you maximize the velocity and the level of volume of that digital credit potential issuance. Of course, nothing is certain. That's our focus, and we will aim to deliver in full speed and with full accretion, and taking the best, of course, learnings from what has worked with STRC, with SATA. And I think a key learning is, that, as I mentioned, that the pace and the level of innovation and execution at both STRC with strategy and Strive with SATA has been really the example there in the market. So Capital B is taking, of course, inspiration, and we look forward to deploying such a model over in Europe. So
I look forward to it as well, Alexandre, and I'm sure our viewers do, who've been paying attention. Thank you so much again for taking the time this week to really give us that insider's look behind, the ins and out of a Bitcoin treasury company, how you think about building products, how you think about, attacking the capital market you're in. Well, leave us with your most bullish words of the week, Alexandre. The floor is yours.
I think the rotation from gold and AI into Bitcoin is just starting, and it's not necessarily that it will be, net zero. I think that all the conditions in the market are creating the structure for more money printing that has already started, and that people can already do their own calculation into what this will mean into the situation that we could be in into 1 year, 2 year, 3 years, and plan accordingly. Do your own calculations. But if the money supply is going much higher, given the shockwaves of AI and given all of the infrastructure investments that need to happen, and given all of the commodity shortages that push prices higher and that push interest rates higher, and that make the only way to pay the interest on the debt to print additional currency, make it that the structural setup is made for Bitcoin to significantly outperform all other classes in the next 3 to 5 years, and that all that we are speaking about today is all the institutional cables that we are setting up with the traditional finance world, so that next wave, some call it the third wave, will be actually the biggest one that we have ever seen in Bitcoin. And Bitcoin treasury companies are the best positioned to take advantage of that potential future that we anticipate.
Love it. Great stuff, Alexandre. And for all of you out there, thanks for taking the time with us this week. We'll be back at it soon. And make sure to send your questions, comments, what you'd like us to talk about to roundtable@bitcointreasuries.net. For Alexandre Laizet of Capital B, I'm Tyler Rowe at bitcointreasuries.net. Take care and stay
Cheers.
orange.